The Electricity Act of 2003 marked a significant shift in India's power sector. It aimed to reform the sector and promote efficiency. The Act sought to create a competitive market for electricity. It also aimed to ensure affordable power for all citizens. The Act led to the establishment of regulatory bodies. These bodies play a crucial role in tariff determination and market oversight. The Act brought about a new era of reforms in the power sector. It emphasized the importance of private sector participation. It also recognized the need for a transparent and efficient regulatory framework. The ultimate goal was to achieve a reliable and sustainable power supply for the country. The Act's impact continues to shape India's energy landscape today. A key aspect of the Act is its emphasis on tariff rationalization. The Act mandates that tariffs should reflect the actual cost of electricity supply. This includes generation, transmission, and distribution costs. Additionally, a reasonable rate of return for the utilities is also factored in. This approach ensures the financial viability of the sector. It also promotes investment in new power generation capacity. The Act's provisions aim to balance the interests of consumers and market participants. It strives to protect consumer interests by ensuring affordable tariffs. At the same time, it allows for a fair return on investments for power companies. This balanced approach is crucial for the long-term health and sustainability of India's power sector. It underpins the country's journey towards energy security. The Electricity Act of 2003 outlines principles for tariff design. It emphasizes the need for tariffs to be fair and transparent. Tariffs should reflect the cost of supply and a reasonable profit margin for utilities. This ensures that utilities can recover their costs and invest in infrastructure upgrades. It also ensures that consumers pay a fair price for their electricity consumption. Tariffs are structured differently for various consumer categories. These categories are based on factors like consumption levels and the nature of use. Residential consumers typically have lower tariffs compared to industrial or commercial consumers. This is because residential consumers generally consume less electricity. The categorization helps ensure affordability for households while reflecting the higher consumption of businesses. The Act recognizes that different consumer groups have different consumption patterns. This is reflected in the tariff structure. Agricultural consumers, for example, often benefit from subsidized tariffs. This recognizes the vital role of agriculture in the Indian economy. Similarly, tariffs for industries may vary depending on their energy intensity. Time-of-day tariffs are another important aspect of the tariff structure. Under time-of-day tariffs, electricity prices vary depending on the time of day. This encourages consumers to shift their consumption to off-peak hours. For example, using appliances during the night when demand is lower. Time-of-day tariffs can help in reducing peak demand. This, in turn, can lead to more efficient use of power resources. Cross-subsidization is a key feature of India's electricity tariff policy. It involves charging higher tariffs to some consumer categories. The revenue generated is then used to subsidize tariffs for other categories. Typically, industrial and commercial consumers pay higher tariffs. The surplus is used to offer lower tariffs to residential and agricultural consumers. Cross-subsidization aims to make electricity affordable for all sections of society. This is particularly important for low-income households and farmers. They rely on affordable electricity for their basic needs and livelihoods. However, cross-subsidization can also disincentivize energy efficiency among higher-paying consumers. It can also impact the financial health of utilities if not managed carefully. The Electricity Act of 2003 also promotes renewable energy through various incentives. These incentives aim to encourage the development of clean energy sources. They include feed-in tariffs, which guarantee a fixed price for renewable energy fed into the grid. Tax benefits and other financial incentives are also provided to renewable energy projects. Promoting renewable energy aligns with India's commitment to combating climate change. It also reduces the country's dependence on fossil fuels. The incentives have led to significant growth in India's renewable energy capacity in recent years. The government aims to further increase the share of renewables in the country's energy mix in the coming years. The Electricity Act of 2003 led to the establishment of independent regulatory bodies. The Central Electricity Regulatory Commission operates at the national level. At the state level, state electricity regulatory commissions play a crucial role. These bodies are responsible for ensuring transparency and fairness in the power sector. The Central Electricity Regulatory Commission and State Electricity Regulatory Commissions have several key functions. They determine tariffs for different consumer categories. They also issue licenses to power generation, transmission, and distribution companies. They also resolve disputes between market participants. The regulatory bodies play a crucial role in safeguarding consumer interests and promoting competition. The Act encourages the development of competitive markets in the power sector. It allows for open access in transmission and distribution. This means that consumers can potentially choose their electricity providers. The Act also encourages private sector participation in power generation. These measures aim to enhance efficiency and innovation in the sector. The development of competitive markets is crucial for ensuring a reliable and sustainable power supply. It fosters innovation and efficiency within the sector. By creating a level playing field for private and public players, the Act aims to attract investments. This in turn drives the expansion and modernization of India's power infrastructure. The ultimate goal is to meet the growing energy demands of the country's rapidly developing economy.